Hello and welcome back to my investing process series of videos. So this is part 4. In this I'm just going to quickly talk through my portfolio management. If you haven't watched the first 3 parts, I'd suggest going and watching them now. I'll leave links to all of them below in the description. Right, portfolio management. Let me minimize this. So this is once I've bought stocks and I'm holding stocks, how do I manage like the number of stocks, what sectors and things they're in, and just ongoing management of my portfolio. So once we've figured out the buying and selling rules, which was the last video, how do we just kind of manage our holdings going forwards? So I'm very much still experimenting with portfolio management, more so than any of the other aspects of the process. This is still very much, I'm trying different things, trying different kind of holdings and that type of thing. But at the moment, I'm trying to stick to a maximum of 20 stocks. So I actually hold a few more than 20 stocks at the moment, and that's purely because of when I first started, kind of a couple of years ago, buying individual stocks. I'm still holding stocks then that I wouldn't have bought now, but they're doing okay and I don't want to just get rid of them arbitrarily because I'm implementing new rules. So the idea is that I'll slowly sell them off when it's the appropriate time to do so and whittle down to less than 20, and then I'll stick to kind of a maximum of 20. And the reason for picking 20 is kind of like an arbitrary figure really, than the exact number. But and I don't have to hold 20, I could hold less than that. So sometimes I could be holding only 15 or 10. But the idea is to keep it fairly concentrated, just so that we're making the most out of, hopefully, picking good stocks. If you hold a basket of hundreds of stocks, you're basically just going to be following the market. So you may as well just invest in an index tracker. So we're concentrating to a certain degree, but it still allows for some diversification. I don't really have the risk tolerance to be holding just kind of like 1, 2, 3, 4 kind of high conviction stocks, because if one of those goes wrong, and everyone makes mistakes, unforeseen things happen all the time, even if you've done the most research and in your mind you're sure that the stock is a winner, something could happen that is out of anyone's control and that stock could go to zero. You never know. So I don't want to risk, kind of, if I was holding 3 stocks, a third of my total portfolio on one stock. Some people that works for, and that is the way that you make the quickest gains if you've got the stomach for it. But for me, I'd rather be a bit more diversified. So 20 gives me that flexibility, and it still allows for some concentration and some diversification. It's kind of that happy medium. So the next thing, in terms of diversification, what that allows me to do is spread my holdings across a range of sectors, so that I'm not concentrated just in technology stocks or just in healthcare stocks, so that when the markets gyrate, my portfolio isn't plummeting at certain times and kind of exploding at others. It's more of a kind of a steady Eddie kind of growth, which is what I'm looking for really, just so that I don't have massive drawdowns. So this again I'm going to experiment this, and this is going to change. But the main kind of sectors within the stock market are cyclical, defensive, industrial, financial, healthcare, technology, and then kind of like basic materials, energy, utilities. I've all lumped into one. And this number is these numbers add up to 20. Is the amount of stocks that I would ideally have in each category. So again, these aren't kind of set in stone. If there's like a really incredible opportunity to buy a really good defensive stock at really good valuation, but it would be my 3rd defensive stock, then I'm still going to do it. It's just for me to kind of track what I'm doing and keep a kind of eye on things. And the way I've come up with these numbers is mainly to do with how many from a particular sector are passing my watch list. So the most stocks that I have passing my watch list are from technology, so I've got that as a high proportion, and there's also a lot more growth than some other sectors within technology itself. You're going to get more compound growth, capital appreciation from technology stocks on the whole than you are from defensive stocks. And then I've just kind of worked it, so I don't want to be holding too many cyclical stocks, and I don't want to be holding too many kind of basic materials or energy because they're quite cyclical as well. And I've got it spread that healthcare is quite a defensive category along with defensive itself. So even when we have big downturns in technology, the holdings I have in defensive and healthcare should kind of support that to a certain extent. So again, this I'm experimenting with this as we go. This is kind of a benchmark that I've got to work from at the moment. As I say, it's just for me to keep an eye on things really. And I also want to do a range of market caps. So I don't want all of my stocks to be mega caps, like kind of Microsoft and Tesla and things, and at the same time I don't want them all to be kind of little minnows, like micro caps that are kind of 20, 30 million pound market cap. I want a range. I want to be holding some of the mega caps for that, because especially ones that are still growing, like Meta and Microsoft, Google, those type of stocks. I want to be holding some of them because they have a level of security, but they still have growth. But they're not going to give you 10x over the next 10 years probably. So at the same time, I do want to be holding some smaller cap ones to give me that chance of getting kind of 10 baggers, 20 baggers, 30 baggers over a comparatively short amount of time. But I don't want to be holding too many because there's a lot more risk associated with the kind of the micro caps, the small caps stocks, because they're still finding their feet. There's a lot more things that can go wrong, and they often don't have as kind of stronger customer base and things as the larger caps. And obviously there's all the range in between. So I'd say for the micro caps, kind of less than 100 million. Small caps, you could call that. Micro caps, kind of less than 50 million. I don't really want more than 3 or 4 stocks under 100 million market cap, just so that, again, it's just diversifying that risk. And then just in general, in terms of ongoing kind of management of the portfolio, so I'll be constantly referring to my selling rules. So again, I went through this in the last part of this my process videos. Again, that's linked below, part 3. So if it triggers any of my selling rules, I will sell it. And I will also continue with any stock that's on my watch list or stocks that I hold, which by default would be on my watch list. I will constantly keep up to date with the company news. So whenever they release annual reports, quarterly updates, trading updates, anything they release. So I have alerts set on my software for any news that is released by something on my watch list I get alerted to. So I'll read through all of the news they release, and I'll update that on my watch list diary, which I will get onto in the next slide, just to give me a consistently up-to-date view of how the company is performing, what struggles they're having, or what outperformance they're achieving, just generally know what's going on with my stocks. And I'll also be aware of macro news and kind of world events and what's just generally what's happening in the markets that could have an impact on the overall stock market. I'm actually trying to pay slightly less attention to this than I was when I first started, just because day to day the news stories yo-yo like nobody's business. One day they'll be saying that the market's in a great place, everything's going up, and literally the day after they'll be saying, oh, we're heading into a recession, it's doom and gloom. So I try and just have a little look through the main stories and maybe watch 15-20 minutes of Bloomberg a day, just to kind of top up, to keep an eye on what's going on, make sure there's no emergency news that day. But apart from that, I'm not going to spend hours reading through all the macro news. I'd rather spend my time focusing on the individual companies. So in terms of my watch list diary, so this is just a snippet of my watch list diary. Again, very, very exciting. I do like a spreadsheet, so there's lots of spreadsheets. So this is just a snippet. I've got Games Workshop there again, because that's what I've been using as an example the whole way through this process. But I just have the stock on the left, and then it's basically just columns for that year's trading updates. So I've got Q1 trading update, if there's any extra news in that part of the year, interim results, Q3 trading update and any extra news, and then the full year results. So I'll do that as they're released, and all I'll do is I'll read through and I'll make a very quick note. I can't fit too much in here, but just a general note of of what they said in the trading update, the kind of the key points and what the revenue and earnings per share and things were, and I'll link it back to the original document. So all of these links here, not now because it's a screenshot, but these are clickable, so I can just click on this date and it will take me to the original document, which is very useful if I haven't looked at a stock in a few months and I just want to refresh myself on kind of what is happening. I can come in here and read this, and it's color coded. So yellow means in line, green means it's a profit beat, so they beat expectations, and there's not actually any here, but red means a profit warning. So I can quickly come and look and go quickly see how the company's doing, and I can click into these and read in more detail if I need to refresh myself on what's going on. So this is just really good for keeping an eye on everything. And this would continue down, so I'd have all my cyclical stocks and then my industrial, and I break them down into categories because that helps to give me an idea of just generally how categories are doing specifically. So at times, it doesn't always work this way, but at times I'll see quite a few profit warnings in a particular industry, and that will just give me an idea that that industry might not be performing so well, so I might want to transition out of it slightly and into another one. And then once I cycle through to a new year, so obviously after a year this is all filled up, I just copy these and put them to the side, so it scrolls indefinitely to the side for kind of historic results, so I can scroll all the way back through over kind of past years and just see the trends that they've been doing. And one of those, this is very useful actually, is if you have a company, one of the ways I've found it very useful is if you've got a company like Games Workshop that's always kind of in line or kind of profit beats, and you can see that going back for years to the side. If they do put up a profit warning, then obviously that's quite a big thing and is very much a reason to consider selling the stock. So I said at the beginning, this is just my current process. I've only been investing in individual stocks for kind of 2.5, 3 years now. I'm still creating my own process. This is what it is currently, but it's going to evolve and it's going to change, especially this part of the process. It's still yet to be proven, so don't go copying this at all. This series of videos is just for people to understand how I'm arriving at the stocks that I'm buying, because I will be putting up kind of portfolio updates and what my portfolio is doing and what I'm buying and selling. So I just wanted something on the channel to give people an idea of kind of how I'm picking my stocks and things. But it will change over time, and I'll probably do updates. And it'll also be useful for me to look back on in a few years' time and see what my process was at the time and how it's changed. And yeah, it's always evolving, so it's gonna be changing quite often. So yeah, consistent actions create consistent results. So I very much need a process to work from. I've realised that from when I first started investing, I'd be buying and selling things without any real reasons, just kind of on whims and how I felt on the day, or a snippet of news that I'd read somewhere that made me think, oh, I've got to sell this, or I've got to buy it. And I'd look back on my actions kind of 6 months, a year later, and I'd sell it on a tiny dip, and then the stock went up another 100% over the next 6 months. I look back, but why did I sell then? And I didn't really have a reason. So that's the reason for creating this process, so that there's a format behind all of it, and hopefully I just stick to it. So I'm going to be trying this, I'm going to be sticking to this. It will evolve, but I'm going to stick to it for at least a while just to see how it's going, at least a year. And then if I need to, after a period of time, kind of evolve it and adapt it. And I think most of the changes I think will come in 2 areas. One in this section, the portfolio management, the number of stocks I'm holding, or how I'm deciding how diversified to be, and also my entries, which is something I'm looking at the moment. I'm reading lots of kind of trading books at the moment, not because I want to be a trader, but to look at how best to enter my stocks. So when they're below that valuation line, when to enter, because in the past I've just been entering once it's below that valuation line. I've just been entering, even if it's still in a downtrend. So I'm very much now looking at, is that the best way to do it, or is it best to look for technical indicators for when it's back in an uptrending and then entering the stock, even if that means I might miss the very bottom. So things like that, so it will adapt. Anyway, I hope you've Let's maximise this again. I hope you've enjoyed this series of videos. I say it's very much for entertainment. Move this off my face. It's very much for entertainment at the moment, and just to give you an idea of my thoughts and what I'm doing. Please do leave comments below if you've got any recommendations for me, or share your investment process. I'd be really interested to see how other people go about things. Specifically to this video, what number of holdings do you kind of typically have? Do you think 20 is a good number? Do you think I should be more concentrated, or do you think I should be more diversified? How many do you have? I'd be really interested to know, because I think this is a really important topic in terms of kind of numbers of holdings, numbers of stocks in your portfolio, and how that equates to returns. And it's something I'm trying to experiment with at the moment. I've got kind of dummy portfolios on Stockopedia, where I set them up kind of a couple of weeks ago, so it's very early days, and I'm just going to let them run for a year or two and see the results, to see what kind of options work best. But yeah, anyway, I hope you enjoyed it. If you did enjoy it, please consider liking and subscribing. I'll be putting out quite frequent videos, quite regularly. And yeah, I hope you have a great day. On to the next one.